If you've just moved to the United States or you're starting your financial journey, you've probably heard the phrase credit score thrown around more than once. But what does it actually mean? And how do you build credit when you have none? That's exactly what we're breaking down in this video, step by step. Let's start with the basics. In the US, your credit score is essentially your financial reputation. It tells lenders how likely you are to repay borrowed money. The most commonly used credit score model is the FICO score, which ranges from 300 to 850. The higher your score, the better your chances of getting approved for credit cards, car loans, mortgages, and even renting apartments or getting certain jobs. But here's the challenge. When you're new to the country or just starting out, you don't have a credit history. No history means no score, and no score can make it difficult to get approved for credit. It's a frustrating cycle, but the good news is, there are clear and proven ways to build your credit from scratch. Let's go through them. First, apply for a secured credit card. This is often the best first step. A secured credit card works like a regular credit card, but it requires a refundable deposit, usually around $200 to $500, as collateral. Your credit limit is typically equal to your deposit. This deposit protects the lender in case you don't pay your bill. Use this card for small purchases, like groceries or gas, and pay it off in full every month. This shows lenders that you're responsible with borrowed money. And because most secured credit cards report your activity to the major credit bureaus, this helps you start building your credit file. Next, consider a credit builder loan. Credit builder loans are designed specifically for people with no credit history. Instead of getting the money up front, you make fixed payments each month to a bank or credit union. Once you've paid off the full amount, you get access to the money you've paid in, often with a bit of interest. Meanwhile, the financial institution reports your payments to the credit bureaus, which helps establish your credit profile. Now, if you're a student, look into student credit cards. These cards are made for college students with little to no credit. They often come with lower credit limits and fewer rewards, but they're easier to get approved for and can be a great stepping stone to building credit, especially if you use them responsibly and pay on time. You can also become an authorized user on someone else's credit card. This is a smart option if you have a family member or close friend with good credit who's willing to help. When they add you as an authorized user, their payment history and credit limit may be reflected on your credit report. You don't even have to use the card yourself. Just being associated with their account can help establish a positive credit history. But be sure the primary cardholder pays their bills on time, because their behavior affects your credit. Once you've taken your first step, whether that's getting a secured card, a student card, or a credit builder loan, it's time to focus on the two most important habits that impact your credit score. The first is payment history. This makes up 35% of your FICO score. That means making payments on time, every time, is the single most important thing you can do. Set up automatic payments if possible. Even one missed or late payment can hurt your score. The second is credit utilization. This makes up 30% of your score. It refers to how much of your available credit you're using. A good rule of thumb is to keep your usage below 30% of your credit limit. So, if your credit limit is $500, try to keep your balance under $150 at any given time. And again, pay it off in full every month. Another tip: don't apply for too many credit accounts at once. Each time you apply for a new credit card or loan, a hard inquiry is made on your credit report. Too many inquiries in a short period can lower your score temporarily. It can also make lenders think you're desperate for credit, which can be a red flag. Now, let's talk about monitoring your credit. Once you've started building credit, it's important to track your progress. You're entitled to a free credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, once a year. You can get them at annualcreditreport.com. Review your reports for any errors, like incorrect addresses, accounts you didn't open, or late payments that shouldn't be there. If you spot a mistake, dispute it right away. You can also use apps like Credit Karma, Credit Sesame, or your bank's credit monitoring tools to keep an eye on your score for free. These won't give you your official FICO score, but they're good for tracking trends and changes. Now let's tackle a common myth. You don't need to carry a balance to build credit. This is false. Some people believe they need to carry a balance from month to month to improve their score. In reality, you build credit by using your card and paying it off on time. Carrying a balance just means you'll pay interest, money you don't need to spend. Another tip for long-term success: keep your oldest credit accounts open. The length of your credit history also affects your score. So if you've had a card for a while, keep it open. Even if you don't use it often, just use it for a small purchase every few months to keep it active, and always pay on time. You may also want to increase your credit limit over time. After you've used your card responsibly for 6 months to a year, you can request a credit limit increase. A higher credit limit can help lower your utilization rate. Just don't treat it as an excuse to spend more. The goal is to use less of your available credit, not more. So to recap, if you're starting from zero, building credit in the US takes a little time and patience, but it's absolutely doable. Start with a secured credit card, a credit builder loan, or become an authorized user. Use your credit responsibly. Pay on time. Keep your balances low. Monitor your credit regularly. And don't fall for credit myths or traps. Within 6 months to a year, you'll start to see results. And over time, as your score grows, you'll gain access to better credit cards, lower interest rates, and greater financial opportunities. Remember, your credit score isn't just a number. It's a key to your future. Whether you want to buy a car, rent an apartment, or eventually buy a home, building good credit opens doors. So start today. Be consistent and build your credit one smart step at a time. Thanks for watching. If this video helped you, don't forget to like, share, and subscribe for more financial tips every week.